All right, so right now what I'm going to do is just start looking at some markets to see what's setting up. And what I want to do is want to explain something, and it's a very simple strategy. All right, now whether you're buying or you're selling, basically you're buying on the up wave or you're buying on the down wave. And the same thing with selling on the up wave or selling on the down wave. Typically, if you're buying on the up wave, you're buying a breakout. Either a minor breakout or a major breakout. Minor breakout occurs near it's like this when it goes down, 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 and then right here is a minor breakout. And then a major breakout is like up here against these highs around here. So, okay, so this is the breakout style. I'm so horrible at this. But anyway, so this is the minor breakout where it takes out in the consolidation area, and the major breakout is above the high. But my point is not to talk about breakouts, but to mention that you're either buying on the up wave or buying on the down wave. So when you buy on the down wave, what happens is, you already have a breakout, and somewhere around here. So you have a breakout here, and then you buy the test of the breakout. This known breakout, I forget what it's called, hold back to creek or break and test, right? And then there's just variations of it. Oh, right here, there's a spring or a ABC against the breakout, right? Or there's something called the test of the low, where you have it over here, all the way here, and then it starts moving. So whatever, it's just buying on the down wave. All right, so it doesn't really, it's not that complicated. The whole point is, you have a breakout. And if you're certain personalities, they'll just buy breakouts. In certain very hot markets, buying breakouts is, even though there's more risk, the markets keep on going. So it justifies buying breakouts because it just keeps on going, especially in momentum type markets. It just keeps on going. Like a lot of those low price stocks during Corona, where you saw a lot of these guys make money, they just kept buying breakouts and holding. And basically, the breakouts would maybe dip a little bit, but then they just keep on working. Yeah, they keep on working. So you'd have like a breakout here, and it might dip a little bit to test, but it would go higher, or it wouldn't even dip; it would just fly, right? So I totally get it. Like those are momentum situations. Also, short covering situations, they go crazy, right? They don't give the shorts an opportunity to get out. So the pullback to test the area of the breakout is less common, especially if the float and all of that is the low float. Anyway, so what I'm trying to mention here is a simple strategy, and that strategy is with springs. It's not a rocket science strategy, but it's a simple break. Yeah, you have a break, right? And then it will either make a higher high or a lower high, it doesn't matter. But it'll go down into a spring position. So here it'll be a spring. All right, that'll be a spring. And when it's in a spring position, it has either it rallies, right, or it goes to resistance, right, or a lot of times what it'll do is it'll test the spring and then it'll fly. This then someone says, oh, this head and shoulder inverse head shoulder or something like that, right? So the point is you have springs against breakout areas. Okay, so why I like this is because it's very easy. It's a very easy trading strategy where you have a breakout, you have your first pullback, then you have a spring of it. And everybody knows this as, I think it's called ABC. Yeah, I think ABC, ABC, something like that, right? I forget what it is, but whatever. ABC against the breakout or a spring against a breakout. This strategy is incomplete, by the way. What it requires is trend, first of all. On speaking from a higher time frame perspective, it requires trend. On the lower time frame, oh yeah, 1 second. Higher time frame requires trend, and it requires the setup, which is it requires a breakout, and then on the test, it requires a spring. On the lower time frame, during the spring, you have to have demand. You have to have demand on the spring. Otherwise, it's in the spring position. It doesn't mean jack shit, because it doesn't necessarily have to be a spring. It could be a lower low, and that would be negative because the lower low is telling you I'm going lower. So that's why on the spring position, on a lower time frame, you must use a wave chart. I don't know how else to do it. You need to use a wave chart to identify demand. Meaning, and of course there are other things. You can look for climaxes, right? Climaxes, which basically hit the stops, right? So you can look for the climaxes, which would demand, right? So you'll be plus the whole sequence of higher high or whatever trend, right? But this whole thing is what I mean when I say demand. You want to see strong hands enter. Okay, so on a higher time frame, you need trend, you need breakout, you need spring position. You don't know by itself whether this is going to work just because it's in a spring position, unless on that spring position there is evidence of demand. On this spring position, there has to be evidence of demand. So I'm going to explain how that looks. So this leg B to C, yeah, we're going to draw that B to C. Right? This is how it should look. Roughly like that. All right, so this would be your B, this would be your C, and on a lower time frame it would be waving down like that, trending down. Here you should have climactic volume, hopefully. Usually you'll have it, and you probably have a lot of like down wave, like some cause. And here you should have your change of behavior. Here you should have low volume testing, meaning the liquidation is complete. And here you should have your higher high. And you need a wave chart for this, because without a wave chart you cannot gauge the volume. I don't know, because I know folks would say, well, you don't need volume, you can just use price. But a lot of times the climax will not show itself without volume, meaning, yes, typically this move down in C is a big move with big volume, but it could be effort also and be a small move with a lot of volume. So to see it, you need volume, because it could be a lot of volume on a big wave or a lot of volume on a small wave. All right, After that, you'd get your change of behavior, and then all of that. So what is this saying? The saying that the climax is saying, in this particular strategy, the climax is saying, I ran the stops. That's what it's saying. All right, or maybe I should put the CM or the smart money or whatever. They ran the stops. What else is it saying? The COB is saying buying or demand. Okay, it's saying yes, demand is here. At this point, what do you know? The CMX plus the COB equals up a tentative uptrend. It's two things. One is a tentative uptrend, and two, oh yeah, climax is over. All right, so that's two things. Well, the stop run is over, the climax is over. Okay, that's what it's saying. Now then the low volume test. What is the low volume test saying? It's saying liquidation is complete. Now you could also say that accumulation is complete, but I'm putting it from the perspective of selling. So, but yeah, I know you could also say accumulation phase is complete, but I want to keep it as close to what Wyckoff's words are, because there's just too much bullshit out there. All right, a lot of stuff what you're reading and seeing on the internet, it's not even written by him. It was never done by him. And it's actually opposed to what he wrote. Anyway, I don't want to get into that. So what I'm saying here is the low volume test mean liquidation is complete. And then finally, the higher high is the trend confirmation, meaning it's direction has been established and they want to go higher. In this, you have to be really, really careful, because if you're counter trending, the probability severely decreases. Especially like, let's say you have your higher high here, right? And over here, there's high volume selling. Like, let's say this line over here, there's some high volume selling. In that case, what's going to happen, this is a counter trend and it already tests. The whole purpose of this counter trend was to test. This is going to go down. So just letting you know, that's the shit that happens. If this is a counter trend, they will set this up so that it tests the big selling block over here, right? Only to fall lower. So this has to be with trend. Otherwise, you'll be stopped out easily. Anyway, so let's combine this here. This is your what? Setup. Your setup, which equals trend plus breakout plus spring. We are obviously up thrust as well, right? So up thrust. Setup equals trend plus breakout plus spring or up thrust, and your signal, because it's setup, higher time frame, signal, lower time frame. Your signal will be higher high in the case of an uptrend, right? Or lower low in the case of a downtrend. So this would be your signal to get in. All right, so setup is this, and the reverse of it would be breakout and upthrust, right? And then the signal, which is on the lower time frame, setup yeah, yes. You never can get. Anyway, so where was I? Setup on higher time frame. Whatever higher time frame you choose and whatever lower time frame you choose. All right. So higher time frame, spring or upthrust, just like this with a breakout and ding, 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 ding. Right? Spring or upthrust. And then on lower time frame, you must have. Oh shit! I forgot the code. 1 second. Weak hands are either out. Weak hands are out. You know, retail just got stop run. So it should have a climax. Then it should have a demand or supply, which means that strong hands are in. Right? So you need a climax. Weak hands are out in case of the spring. In case of upthrust, they would be buying. So because they would be buying the highs. So that means that weak hands are in and they would be distributed to, right? So climax, if it's a selling climax, weak hands are out. The stops are run. If it's a buying climax, there would be high volume at the top, which means that they have bought the high and distribution has occurred to them. And then weak hands are in. Then the change of behavior, which means that basically strong hands or the CM or the smart money has taken their position, right? And then these two together is telling you that the trend is up in the case of, you know, a turn from a downtrend to an uptrend, or is down, the trend is down in case of an uptrend to a downtrend. All right, so the trend is established. All right, so one second, let me just write this a little bit better. We'll write it. Tentative trend, whatever it is, uptrend or downtrend. Now, after that, low volume test occurs, which tells you liquidation is complete because it didn't break the low and it's holding the low or around the low, and there's a significantly less volume, definitely less than half the climax. So it should be significantly less on the test, at least half, but I would prefer much less than that. And then after that, a higher high, trend confirmation in the case of an uptrend, or a lower low in case of a downtrend. So this is what you're combining, the setup with the signal. So I'll just give some examples of this now. So I explained this. You should know that now. And this is the easiest one. It's very easy to see. I'll show some ones that are happening right now, ready, like you, you know. So here, what you have, as you know, breakouts and breakdowns must have follow through for them to be legit. When breakdowns do not have follow through, what are they? They are springs. And when breakouts don't have follow through, what are they? They are upthrusts, right? They are false breakouts and breakdowns, or when the breakout or breakdown does not have follow through. In the case here, you have a breakdown. Does it have follow through? No, it reversed and broke out above the high. Does it have follow through? Yes. What does that do? Legitimizes the breakout. Then what happens? This pulls back here and test and spring against what? Against the second. Always mess something up. 1 second. Okay. Where's the box? There's the box. So over here you have a breakout. You got follow through. There's a minor upthrust against this, shortening of the thrust or upthrust, and then it comes back. But do we take this? Hell no. Why? Because there's no breakout in the back, breakdown in the background, right? It just means that there's a lack of momentum, and that's why it's going to get rejected. And there's a lack of buyers. So we're observing the breakout, and it goes down into a spring against this low. Even if you get a breakdown here, it's the same thing, because spring and breakdown is the same thing. Breakdown that doesn't work is the same thing as a spring. Breakout that doesn't work is the same thing as an upthrust. Or at least you could say it's a false breakout and it upthrusted the high and has no follow through, so it's an upthrust. And I don't want to get into the different types of upthrust and springs. I think that's like the that's just a weird topic. It's very simple. You have resistance or support, and can you break out and have follow through? Yes or no? In the case breakdown, does it have follow through? Yes or no? That establishes whether it's a spring or an upthrust. You want to add something more to it, just add trend to it. You want to add something more to it, if you'd have it on volume, then still, whether it's high volume or low volume, in my opinion, like it can mean the same thing. Because if you have high volume, it means there was a lot of effort and failed, and maybe stops were run, and then it reversed. If you have low volume on that spring, it would mean that there's no selling pressure. So both indications are bullish. So why get into those silly distinctions when they're unnecessary? So here what you have is a breakdown which didn't have follow through, therefore it is a spring followed by a breakout. Now we wait to see the test of the breakout. First test of the breakout, okay, good, it passed, meaning it went up. Now wait for the spring. Right here's the spring. On the spring, what action do you have? You have your climax, which is what? Weak hands. What happened? They got their stop run. That's what happens. That's why the volume here is high. When the spring has high volume, it means that there's a successful stop run. You see? When a spring has high volume and then immediately reverses up, by the way, it needs to reverse, otherwise it'll be a lower low or a breakout. So a spring, when it has higher volume and then totally reverses, it means a successful stop run. And now you have a successful stop run, and then you have a higher high like that. What's that mean? Demand coming in. Run it and buy it. And then you have the pullback here telling you what? Telling you that there's liquidation is completed, or the stop running is completed, and you have your higher high, and that leads to what? Leads to a move. So here's an interesting example where you have the opposite. This is a potential climax where weak hands have entered, and here or here or here, you have selling. You have strong hands selling here, strong hands selling here. So at least this, in my opinion, it would probably test a little bit, and then it'll go down to at least go down to support, because here trend changed. The same logic where you see that what happened here, because do you think smart money is buying these highs? Obviously not. They bought here, 756. Are they going to buy up here? No. Who's buying? Weak hands are buying, so distribution is occurring to them. Then you have pressure coming here. What is that pressure? That's being caused by smart money. Then you have this minor little upthrust right here, right, which some folks would call a liquidity grab or whatever, but that's your upthrust, and goes down and makes a lower low. Where? Right there. Right there. Lower low. Yeah. Tests the upthrust and for sure makes look at this. Red, 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 red. Red, 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 red. You know? So what do you think is going to happen? It's going to test, maybe pop up a little bit, and then go down to some support level or worse. The only thing is that it's a counter trend. So you know what I just explained with counter trends? They are what? Their purpose is to test. The purpose of counter trends is to test some level. That's what they do. So I'm just saying that must be the purpose, because that's what they do. Yes, they're also used to bring it down to lower prices, test those prices, reaccumulate or redistribute, or get people to jump in and then do a short covering rally. Yeah, those are also ulterior motives, and that's what happens. But what they do, in essence, is go to levels of breakouts and breakdowns that have not been tested and test them. And then from there, you see some reaccumulation or redistribution and then flies back up. So as far as I'm concerned, I'm just trying to get the strategy here, explain it. And what that strategy is: breakout, spring, hold on, trend, then breakout, then spring, these three things on a higher time frame. Then going to the lower time frame to observe what is happening on that spring. What is happening on that spring? Seeing whether there was a successful stop run on that spring. Check. Was there demand after that stop run? Check. When it pulled back after that demand, was liquidation or that stop running complete? Check. Did it make a higher high after that? Check. What does that mean? We're going up. Okay, so that's the idea here. Should also be note that this strategy was David Weiss's strategy that he talked about. So credit to David. It's not mine. This is something that he talked about, and it is available on webinars on YouTube. If you want to see it, you can go and see him talk about it in Big Mike webinar. He talks about this particular strategy, and there's another webinar. I forget what it is, but there are at least two webinars where he talks about this, and you will hear him say that if you want one simple strategy, breakouts and springs, and he talks about this. All right, that's all, folks. Thank you. Bye.